Good morning. Good morning. It is Tuesday, the 18th of April, 2017. It's 8:01 a.m. Chicago time, 9:01 Eastern. Thanks for joining me again for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The current market stance is for risk off relative to yesterday's close. The Euro stocks and the DAX are the leaders downwards. Looks like I guess I could call them laggards. 0.83% on the Euro stocks is what it's down, and the DAX has a drop of 0.65% or 79 points. Let me turn down my news feed a little bit. Followed by crude oil. Crude oil has rolled to June. We're now trading June 2017. It's trading at $52.82, down 29 cents. And then the leader today is the euro, up 48 pips at 1.0723 or 0.45%, followed by the U.S. Treasury bond and the 10-year note, and then the Japanese yen. So all those safety instruments are leading. Indices are mostly on the sell side between 0.25 and 0.5%. The key news items for today: Theresa May, UK Prime Minister Theresa May, has issued a statement in which she will be holding a general election on June 8th, but it must be approved by a two-thirds majority in Parliament. This came out around 5 a.m. Chicago time, 6 a.m. Eastern. This was expected by the market. Also, China's home prices keep going up. Prices jumped 0.6% month over month in March. A very hot housing market over there. Year over year, housing prices in China have gone up 11.3% versus 11.6% in February. And iron ore's tumbling. Other than that, seeing what's on deck for today. Bank of Canada announced its earnings, 41 cents versus 35 cents on revenue of 22.2 billion versus 21.5. Goldman Sachs came in worse at $5.15, $5.15 versus 5.38 expected. Revenue also came up short, 8.03 billion. 8.03 billion versus 8.37 billion. It increased its dividend 15% to 75 cents per share. And then there's also Johnson and Johnson and various others. Remember, we're in the earnings season. If you want to keep an eye on that. Let's see. So it wasn't expected, it was speculated. The statement says PM May statement calls for general election June 8th as speculated. I used the word expected, that is incorrect. It was something that was speculated, and it came true. At 7:30 Central, 8:30 Eastern this morning, we got U.S. housing starts 1.22 million versus 1.25 million. Building permits 1.26 million versus 1.25. And then what's expected for today? The only remaining number is business inventories for February, expecting 0.3%. That's at 10 o'clock Eastern. Whoa, I'm looking at the wrong calendar or something. Interesting. Yeah, this doesn't seem correct. Hmm. Yeah, no, that's incorrect. It looks like 9:15 industrial production coming up in 10 minutes here, and then the calendar's clear. Fed Speaker George is already speaking. So yeah, this calendar's got the wrong dates on here, but it looks like we don't have much on deck for today as far as releases. Let's switch gears and look at what we expected yesterday versus what we got. Yesterday's expectations completely off. This did not work out at all. The expectation yesterday, given the European markets being closed and given that we had a neutral extreme day into this low volume zone, the expectation was that we would make an attempt higher and then push lower to yesterday's close or the prior session's close, which was last Thursday, and then to go sideways into the session. Did not expect much volatility or much range yesterday. The alternative is to test down earlier, which is what it did. We saw that we were going for hypo 2 early on. However, I didn't expect to see it much farther than 35.50, 36 on the upside. So the range was expected to be very, very low on the low end of the value of range, around 6 to 7 points. But this is what ended up happening. Here's what happened here yesterday. So we see this dip early, an attempt early, and then we get this pretty decent impulsive move up to 37.75. So that puts hypo 2 in play. And then the expectation was it's likely to just sit sideways for the rest of the session. And what it did is it continued to push higher. It ended up ultimately taking out the point of control of last Thursday. Remember, I mentioned yesterday that even though we finished with a neutral extreme, the odd thing was that we didn't move this point of control down to the bottom, so it's not as strong a sell-off as we would like to see. Value remained on the top side, and that's what's important about monitoring volume, is it shows you where the trading volume has occurred, right? Price and volume are two indications as to what the market's auction sentiment is. Yesterday, the key figure that we were likely to test was 40.25, and so we started to approach it. The 40.25 has been a price that we've carried for quite some time now, for a couple weeks. It's also the key low volume node from Thursday. You can see that it's a very low volume node. It's key because it's the first low volume node away from the point of control. The expectation on 40 is that it's likely to push in and then start its rotation and then a lower high, and then it might start to push back, and that's really what I was looking for. That was wrong again. It did end up making a lower high, and then it had this 6.75 point rotation, and you note that a lot of volume took place on the close, leaving us again with a low volume node at 23.40.75, 23.41. A lot of energy here on the close. Because of the energy on the close, the expectation is that it's likely to continue higher overnight, which it could not do. It ended up pushing through by just 4 ticks and then selling off, and we'll look at that in a minute. In my opinion, very odd behavior. From an auction perspective, it's not something that we see commonly, especially with the European markets being closed, for it to take on this much range to the positive side. Now, yesterday we covered 18 points basically on a bull run on a Monday where the European markets are closed. That's highly unusual. And so if you look back and see, you'll find that, and it did it on pretty low volume. So overall, the way it closed, the way it behaved yesterday, I found to be a little uncommon. So that's where we ended up. We ended up with this double distribution profile. Even the profile is showing us how odd this is. We have a very sharp high kurtosis point of control at the high, and then we have a secondary distribution down below. In my opinion, we're likely to retest this area and see where we stand on this balance first. The other thing I wanted to look at here is We had 3 days of balance last week, the Thursday, Friday, and Monday, or a couple of weeks ago into last week, and then we dropped. We had a gap down, and we dropped, and have gone sideways Tuesday, Wednesday, and then Thursday we finally broke lower. So for that reason, let's clear this up a bit. For that reason, I'm going to create a new profile here. Let's start it right there. Send it back. And then we're going to creep it forward and see where volume has accumulated yesterday. You can see that it's the key area up here is 43 and a quarter, which is where the upper distribution was this morning. We're trading at 37.75, 37 and a quarter. The expectation is any push up is likely to find resistance up here between 45 and 46 on the first try. I'm going to be looking to be a seller under most conditions as the market pushes higher, except of course for news. I expect that the market is likely to encounter pretty good resistance on the way up on a first test. The overnight session, there it is. So we close up here. We go sideways through pretty much the entire Asian session. We're confined to a profile that is very, very small and very consolidated. And then as soon as Europe opens, we get this parabolic move down, 11 points. And then we have a bounce back up to mid and VWAP, and then we're holding on here. Of course, under normal circumstances, I would expect that the market is likely to push up, wiggle around, and then continue this move lower. However, I know better. I know that the market has pushed lower on the overnight, and it has come in and consolidated and pushed up on the open. So given that that's the, I can't take the movement overnight and project the behavior of the day session onto it. It becomes a different product once the day session opens. That's why I look at the overnight session and then I cease using it to color the day session. I'm looking for key areas in the overnight session that might have confluence with day session values, but then when I trade, I'm not looking at the overnight session at all. It's because it is a different animal overnight. The S&P trades in sympathy overnight, and then during the day session, it trades with its equities with a market that is active. The volume's pretty good. Overnight, traded 217,000. Pretty meaningful move lower. Inventory is short. This morning, so I'm expecting it to bounce. I'm looking for responsive buying on the open. That's another reason for that. So the expectations this morning, a lot of noise, a lot of levels in this area. The expectations this morning is we're opening in the lower distribution of yesterday, open auction. I'm not expecting much more. We're opening in the consolidation in this zipper from yesterday. I'm expecting a dip and then looking for it to start pushing up towards 45, 46, pull back, and then for it to finish somewhere in the lower distribution of the range from yesterday. That's the expectation for today. Oops. Okay, so wow, I'm not able to draw a circle. There we go. So that's what I'm expecting for today. I'm expecting a quick test lower, and then I'm looking for the market to try to push up through 41, potentially reach this 43 MC point of control, encounter resistance, form what looks like a head and shoulders, roll over, and come right back into the distribution it was in yesterday morning before it broke out onto the close. Okay, that's the primary hypothesis. The secondary hypothesis is for an immediate push, responsive push higher that gets a lower lower return, lower pullbacks, and then for the market to continue to push as it regains momentum to the upside, uh, like we saw yesterday. Earnings have been pretty good. There's a lot of room. The market is relatively quote unquote cheap right now versus where it has been. I expect that the same sort of action is likely to continue again today. There's a pretty decent probability of this Hypo 2 playing out. I would not fade too much above 43. The market is likely to push through, and then the target becomes this MC point of control at 53, and it brings us into the balance that we had prior to the 10th of April. So that brings us into line with what we had before. Let me zoom in a little bit and show you that. So what this is likely to do, Hypo 2 is likely to do, is push us through. And then what happens is these days, these last few days become a base. So the expectation is over the next few days, pull back to this area, and that becomes your base for continuation higher. I'm not saying this is what will happen today. I'm saying bigger picture, we're likely to push up into the bigger consolidation and then start to get on the other side. We're essentially finishing. It appears to be finishing testing the lower side of this particular balance zone that we've been in since March. So it tested from the bottom side. Once it gets through the 53 and a quarter, it is likely to pull back and continue and then push through to the upside, and then your targets become 2371.50, and then pushing through all the way up to 93.50 and so on to the areas that we've left behind, balance areas that we've left behind. So I'll leave you with that. That's all I have for you for now. I want to remind you again, tomorrow is the AMA sponsored by Futures IO. It's a public AMA. They're done once every couple months or something. Come in with your questions, and it's about an hour. The goal tomorrow is to get through as many questions as possible. Hopefully you can gain some insight or clarification on something that I talk about that is unclear to you. Take that opportunity to show up and sign up. The registration link is in the description of this video on YouTube. Grab it there, or it's on my Twitter feed. Good luck, and I'll catch you tomorrow. Take care.